Hello family, welcome back to the channel. It's your boy E, the Dividend Passport Bro, back with another video. Guys, as always, I'd like to say thanks for all the subscribers, for all the questions that you guys continue to ask, and as I've tried my best to provide content based on my portfolio and what is going on with my portfolio. As always, this is not financial advice. So don't use it as financial advice. Just use it as a guide and motivation to get you to the next level. Now, I've been getting a lot of questions about, where to start, how to start, and it's not a one size fits all, right? Take this channel for example. This channel was started almost a year ago, and it sat there for a while until my portfolio went down and I decided to start making more videos and posting to this channel. So take that as you who been living your life for a while. You could be 20 years old, you can be 50 years old, but at some point you're going to make a decision to want to invest for your future. Now this happened to everybody at different stages in their life. This happened to me when I was 46, I believe, 45, 46, when this happened to me. 2019 is when this hit me, right? And I decided, well, I've done day trading before, so I have some experience in buying and selling stocks. But I knew that I didn't want to be a day trader. So let's say if you were me in that situation and you need a way to get out. When I say to get out, you need a way that 10 years from now, you can say, you know what, I've worked my butt off. I work hard. Now I want to be able to provide for my family. At some point, when I get old, too old to work. Now, for me, I always was looking for a way to retire early and be my own boss. So working for other people was just a means to provide me to the level what I needed to get to where I want to invest, right? And when I found dividend investment, I realized I was like, you know what? I can do this, right? And somebody asked me, say, how much money did you start with? And I might be wrong, but maybe I started with 300, maybe I started with 600. But I remember when I went to open my account with M1 at the time for my brokerage, my Roth, I think the minimum was $500. I had to put $500 in there to open. Now, I might be wrong, like I said. But I believe I put $500 in that account and I put $100 in my regular brokerage account, right? Now the Roth is a retirement account, and the traditional brokerage account is just a brokerage account. I can sell by anytime I want and take that money and use it. All I have to do is pay the taxes and there's no penalties. For a Roth, of course, you can take what you put in, but you can't take out the gains until you reach 59 and a half. Okay. Now, at some point, maybe they might change their law. They might move it up or down. I don't know. But for now, that's what it is. Now, I also had a question. Somebody said, well, Edwin, somebody told me you can put in more money, blah, 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 blah. Okay. As for me, I'm 50 plus. So when you are 50 plus, as of this year, I guess, last year, I don't remember what it was. I think it was 7,500 last year. But as of this year, right, you can put in up to $8,000 if you are 50 and above. If you are below 50, it's $7,000. It might be 7,500. But if you're below that, that's what it is. I think it's 7,000. I didn't check this today, so I'm just going off of memory. Okay, so you can put in that much money every year, right, into that. But that's not the only way to save for retirement. So if you have a job and they're paying you and they offer you a 401k with a match, then you can put up to, depending on what the matching, some job might match 5%, you can match up to that 5%, right? And sometimes, in some cases, if you're a high income earner, I believe is you can put up to 20 something thousand additional into your retirement account, right? Into your 401k at work or whatever. Now you do have to pay taxes on that money later on, right? So there's a thing called the backdoor Roth. You guys can look this up. Called a backdoor Roth, where you can put, let's say you leave a job, you have money, you can put that money into a rollover and then roll that over back into your actual Roth. Now this is not included into that 7,000 if you're under 50, or 8,000, 7,000, right? If you're under 50, or 8,000 if you're 50 and above. Okay. So a backdoor Roth is something similar like that, where you can put money into an account. If you make too much to invest, you can put money into an account, and then the first of the year, you can move that money into your Roth. Like I said, look this up. Everything is out there on the internet. You just got to take the time to look it up. Now, if I'm saying something that you can always ask questions. You can pause the video, play it slow. I know I talk slow enough, right? But when you beginning your investment journey, right? There's stocks, there's bonds, there's ETFs, there's mutual funds, there are REITs, have now cryptocurrency. There's a bunch of stuff out there that you can use to invest, right? But you have to set clear financial goals on what you want to do. You can just say, oh, you know what, I want to invest and do all this good stuff, but you don't have a goal. And this is what, when I talk to people on my one-on-one, that's why I prefer for people to call me, send me an email, so we can schedule one-on-one, because financial journey is different for everybody. Because some people have more money, some people don't. So you can only invest based on what you have, extra money, right? I talked about it last time. You can say, oh, I want to invest $500, but you only have an extra $200 every month after you pay all your bills, after you have your leisure funds, all of those things. You only got $200, but you're going to invest $300. Now you short. You're going to bet $500. Now you short $300. Where are you going to get this money from? Okay. So guys, you got to set goals, right? You got to set your short-term goals, which would be 1 to 3 years. Say, okay, well, I want to set a short-term goal. I want to put up my emergency fund. I want to have an emergency fund. I want to be able to put money aside to invest. Now, in the beginning, I had emergency fund. Now, I don't. But in the beginning, I had emergency fund, right? I put money aside, and it was 3 to 6 months worth of expenses aside, just in case I will lose my job or I'll get sick, I can't work, short-term disability, long-term disability, whatever. Because those don't pay 100%, right? So you need that. Then you're gonna set a mid-term or medium term or whatever goal. Now it can be anything, right? What you want to do, and that can run from, let's say, 3 to 10 years. That can be a mid-term goal, and you can decide what you want to do, right? What you want to help your kids, save for college, pay the college, or put a down payment on the house. But as I told you guys the last time, rent a house. Preferably, it's better to rent, because you can rent for 1 year, 2 year. If you don't like it, you can move out. Better than buying a house. Now, if you live in a house in a neighborhood that you don't like, now you can't really sell the house easily, and you might have to rent it out. You might have to rent it out at a loss, where you have to pay money out of your pocket. That happens. I've done it. It happened to me before. So that happens. So you have to set goals based on what works best for you. All right. Now you can set a long-term goal, which would be retirement planning. That would be like a 10-year plus goal. I said 10 years because, let's say, I was talking to somebody yesterday, and I was telling them, I said, look, it's best to get 2 jobs, which I've done it for a long period of time. Get 2 jobs. Do your regular things with your first job. Make sure you cover all your expenses. And then your second job, take 80% and invest. Let's say you're making $100,000. Take $80,000 and invest that, right? The other 20,000, you can take that money and that can be your fund money. Of course, there's taxes. I'm just giving a round figure. So I'm like, yo, Edwin, but you didn't take out tax. I'm just giving a round number to make it easy. And the other 20,000 can be your travel money, can be your fund money, can be whatever you want to do. That's how I did it. So that way I never felt like, oh man, I'm putting all this money away and I don't have nothing. I'm just investing all this money and I'm not having no fun, right? So, and I had my first job was like regular. I pay all my bills with that. I still invested on my job with that. I did everything I needed to do, but the second job was primarily for my investments and my fund. The other 20% was my fund money to do everything I wanted to do. Okay. Now, as you build your emergency fund, you don't have to say. Some people say, get out of debt before you start to invest. I don't recommend that because investing is like a muscle memory. When you do something for a while, it becomes part of you, right? So once you decide you want to do that, you set all these goals. Now you have to choose how you want to invest, right? And like I said, it's muscle memory. So if you got debts and you're paying down your debts, believe me, I've done this, right? As you're paying down your debts, and if you take the money that you say, okay, well, I got to pay all my bills. That's why I tell you guys to track everything you spend. I have a tracker. If you talk to me on a one-on-one, you know I already given you a tracker to track your expenses. And you guys are grown, so I'm not, and you're not paying me to chase after you to make sure you do what you need to do. I give you the information, and it's up to you to use the information right. If you don't, that's your business. You know, it's free. You're not paying me. I give you my time and my energy as I make these videos every day because I want to see people like myself succeed. Guys, women, you know, young, old, right? It don't matter color, skin, but I want to see people succeed because, of course, I have a decent job, but I didn't always have a decent job, right? I didn't always have a decent job. And, of course, I've been laid off before, like many of you guys who've lost your job in the past. And when my salary was cut to 50%, I decided, you know what, I'm never going to go to this again. And this is when I start planning this. I start doing this. So when you build your emergency fund, now you say, as you build your emergency fund, right? So let's say, some people say, well, save the first $1,000. Yes. Once you save the first $1,000, you know, that can be a milestone. You celebrate, right? And when you pay your debts, pay the smallest debt first, and then you tack the next bigger one, the next one. The reason why, because for me, I felt like I was doing something whenever I pay something off, it motivated me to do it even more because I can see what I'm doing. I was making little bitty steps. So as you set your goal, say, you know what, I need to get, the first goal would be get to 1,000, and then after the 1,000, you say, you know what, I need to get to my first 3 months expenses. So if you're spending $3,000 a month, right, then you need to have 9,000 a month. That was the first goal. Then the second goal would be to double that, you know, to double that 9,000 to 18,000. And then once you get to that 18,000, then you can stop. You can start putting money into your emergency fund, right? And then the extra money that you put into your emergency fund, now all that money can go into your investment. Now the emergency fund need to be in a high yield savings that paying anywhere from 4 to 5%, preferably in an online banking account that you don't have easy access to. So you're only going to pull that money in case of emergency, and if something happens, you can transfer the funds, and usually take a day or two to get to you. If it's on the weekend, of course, it's going to take a few other days. And also good to have some credit cards that have, you know, high limit credit cards, 2 or 3 of those that you use a little bit and pay them off, right, to help grow your credit. At the same time, that would be almost as an emergency fund. So if something happened, you need money immediately, or you need to pay something off, and you need to transfer funds from your bank, you can use that credit card and pay that off pay whatever you need or pull some $1,000 on their credit card, it's automatically transfer. When that fund come back, you can pay that credit card off. Plus you get points or whatever else. And if you're building credit, I tell people to use their credit card to go to the market, all that stuff. At the end of the week, all that money you pay back to the credit card. Of course, it's something that takes time to build. Now, this video today is going to be long. You gotta ask for this, okay? I'm giving you guys what I did to get to this, right? And then once you get that emergency fund in play, you don't have to get to that amount, but then you paying your credit cards down, and you're investing at the same time. The reason why I say do that all at once, because you build that muscle memory of investing. Now it can be $100 a month, right? Because you pay down your debt, and then when you pay down a certain debt, the next time you're paying to the next debt, you continue the same amount, right? You're not going to be trying to pay more, but you're paying that debt down. You're paying on all the other debt, but you're trying to maximize on the one that you're paying on, right? So you might have 5 credit cards, and you might have the minimum payments of $500 of all of them together, right? I know it's a high amount, but then you might have one credit card that might be $1,000 balance, and you might have one at $3,000, one at $7,000, one at $10,000. But you attack the ones first with the lowest balance, pay that much, try to pay that off in 3 or 4 months. Then you go to the next one and the next one. As you pay that down, you continue to invest. What is $100, $200 a month, $50 a month, whatever you can put into your investment account, do that. And I tell people, say, have 3 investment accounts. The reason being, right, you have your Roth, right, which is your retirement account that you do it for yourself. Okay. You have an account for growth account. So let's say you're buying like a Tesla, Nvidia, Microsoft. These companies, some of them pay dividend, but they're very low dividend. So I consider that to be growth play, right? And then you have another account that is 100% dividend position, and that would be like a SCHD, VOO. I'm just giving you some names, but something that pay a little higher dividend, right? So you need those 3 accounts. And for your Roth, like I said, you have to put in, depending on your age, you have to max out at $8,000 if you're above. If you're 15 and above, and below 50 is $7,000. Like I said, you can check. It might be 7.5, but y'all can check it. Okay? And you have to do that. But try to max out that retirement account, because you have 10 years. So in 10 years, you put in $8,000 a year in there, right? In 10 years, let's say that's $80,000. But that's gonna grow the dividend, because if you get good positions, that dividend gonna grow, and then some of those companies grow also with growth, right? So you might get anywhere from 5 to 10%, or maybe 15-20% a year. It might range, right? And then plus you get in dividends. So the dividend is reinvested into those 2 portfolios, your Roth and your dividend account. And then your growth, they might get a little dividend. That dividend might be reinvested also. But you're going to continue to buy in that. Okay? And that's how you do. But you can't say, you know what, oh man, I need to do this right away. Because when you rush, it's when you make mistakes. And when you make mistakes, you lose money. Okay? When you make mistakes, you use money, right? You can, and also you try to diversify. Basically, you can take all your money and buy a Tesla. Some people do it. I mean, you might be lucky and Tesla continue to go, and it never, and you be a millionaire in how many years or whatever it's going to take. But preferably you want to put your money in different things, spread out. So if one go down, the other one is making money. That way you continue to make money. And the reason I like dividend, except the company cut the dividend, you get the dividend kings, dividend aristocrats. Those companies have been providing dividends forever, right? Some of them, there's some of them that pay 3-4%. And 5-6% is, I think that's the sweet spot. I mean, you can even go up to 9%, right? Like the JEPQs. I mean, those are not qualified dividend, but still, they still provide dividend. And if it's in your retirement account, you don't have to pay no taxes on it. That money just growing. And then in your growth account, of course, it's still growing, right? Like a Palantir. I got Palantir. I love Palantir. I bought it when it's at $12 or something. And I got over 200 positions of Palantir. Now I need to buy more. I need to get it to 1,000 right now while they're kind of low, before they get to 100, because at the speed of this company, they might be at $100 per share. I won't say by December, because I mean it's just a couple of months, but I mean at the rate they're growing, they're gonna be close to $70, $80 before the end of the year. And that way by the first January, by first quarter of next year, depending on how well they do, they can be at $100. Okay? So I mean, like I said, this is not financial advice. I'm just talking, right, guys? So you can do, and then one thing is good to, like, it's good when you're doing your investment. People say DCA, DCA. You hear the term all the time, DCA. It's just a daily cost average, right? So you continue to buy whether the stock go up or down, right? For me, if I have money, I buy it, because if I want it, I buy it, and I will buy, maybe if I want to buy 100 share, I might buy 80 share or 70 shares, and then I would daily cost average after that, because I want to get to that certain number, and or I would just get to that number 100, and then I would still continue to buy a little bit at a time, because it's just how I operate, right? It's when I go home, and then sometimes that can be risky, but I mean, you don't say, oh, you know what? Like I tell you guys all the time, don't time the market. Oh, you know what? Tomorrow is the best day to buy. No, just buy. If you got the money, especially I like to buy when the market is down. That's when I like to buy. Other people like to buy when the market is going up, which is stupid, because you're buying at a higher rate. I like to buy when the market is down, because I know it's going to take time, but it's going to go back up, right? That's why I took a lot of profits, over 50 something thousand dollars worth of profits that I took last week. Now, when the market opens tomorrow, of course, I'm looking to buy some stuff to collect dividend, and then probably not tomorrow, maybe on Tuesday, Wednesday, will be when I will buy. Let me see. Yeah, maybe Tuesday or Wednesday is when I will buy, right? I will buy and then hold till the end of the week, and then Monday I'll probably sell and take that money, then buy this and buy something else. Because right now I need to bring in more dividend, because I need to pay off. My margins, right? But like I say, everybody got their own strategy. But daily cost average is key. And I tell you guys all the time, for me, I look at this as a business, right? I look at these positions, these companies as a business, and I try my best to take my emotions out of it. And sometimes, of course, we all make mistakes. I mean, I'm not perfect. We all make mistakes. And, for the most part, you got to do what's best for you. Okay, guys? You got to do what's best for you. But we all make mistakes. And, I mean, like I said, I'm not perfect. But you got to do what you want to do. And don't say, oh, you know what, Edwin, that guy, man, he be talking. Sometimes he just be rambling and stuff like that. I mean, the stock market, it's almost like gambling. It's not quite like gambling, almost like gambling. But people lose money all the time. So I'm not telling you, oh, it's all fun and games. And being a dividend investor, it is very boring. It is very, very boring, guys. And the reason why I tell you guys to schedule one-on-one, because let's say if you don't know how to buy a stock, I make videos all the time. It depends on what's going on in my head or what somebody say. I might make a video and add that to the video. So, and my videos are pretty much named the same thing, right? So I don't name video different stuff. I might have one or two that is named differently, but my videos all named the same, because this is just about me and my portfolio, right? I'm not telling you, I'm not analyzing different stocks in detail. I'm just talking about how my portfolio is doing every day in the market, right? At some point, yes, maybe I would do that. But for now, I just enjoy talking about my portfolio and trying to motivate you guys, to get you guys to want to invest into the market, right? And some people say, oh, Edwin, make a video on how to for beginners. I mean, this is the beginning I suggest. I have other videos on the channel that talk about buying stocks for beginners, but I mean, it's kind of hard to go in depth, um, on what to do because everybody is different. I don't know what you want to invest in. I don't know how old you are. So, and I can't really talk about me because I know how old I am. I know how much money I make. I know how much extra money I have after I pay all my bills. I know how much so I can make a video just talking about me. But if you want specific guidance or help on how to get you started, I will tell you, open the 3 accounts. Um, the brokerage, because if you a small investor, you need an account that can allow you to do fractional share. Fidelity is one of them. Moo, M1. I think Weibo does that also. I haven't used Weibo in a long time. I have an account with Weibo, but I haven't used them in a long time. But Fidelity and Robinhood, they do fractional share. Okay. Now, of course, with Robinhood, when you go to do fractional share, do market rate, they always add a percentage, increased percentage on that. So when you buy, you're spending more than what market rate is. I made a video on that. I talk about that in one of my other videos. Maybe I need to do a separate video. But if you need help buying a position and you don't know how to do it, like I said, guys, I'm very easy to be reached. All you got to do is send an email, join the Discord. Somebody said that the Discord link wasn't working. Guys, I usually just copy and paste stuff from my previous videos, and sometimes the link is old in there when I copy and paste it. So bear with me. And I've told you guys many times I'm lazy. That's why I do the things the way I do it, because I like the easy way, and it's less stress for me. Because I don't like stress. I like to keep it simple, and you just have to start. I always tell you guys, you just have to start. Open your account, transfer your funds. Once you transfer the funds, then if he needs to say, Edwin, make a video, I got money in my account, I need to know how to buy a stock or whatever, then I will tell you how to buy. Because in the Discord, there's stuff in there about dividend aristocrats, dividend kings. Those are the companies that you need to buy in the beginning. Don't go buy no high yield stock in the beginning if you don't know how to buy or sell stocks. Okay? And this is a buy and hold game. If you want to be a dividend investor like myself, it's a buy and hold, right? It took me almost 5 years to get to where I'm at. And most of those 5 years, I was working 2 jobs until I get burned out. And I was putting in 80% plus of my income into my investments. This is how I got to where I'm at now. Okay? And that's by doing this slow. I just started adding more high yield investing into my portfolio, I believe, in the last 4 months. I just started putting more money in there, and I started using margins and stuff. And I started buying more riskier positions. So, I can tell you guys, don't do what I do. Do what I say. Because if you do what I do and you make some mistake, you're going to lose all your money. And I don't want you to say, oh, Edwin, he didn't tell. No. I try to be as transparent as possible with you guys. Because, like I said, I'm not here to make money. If you want to send me money, fine. Send me money. I'll take it. But I'm not going to turn your money down if you send it to me. But I'm not here to make money. I'm just here to help other people invest in the future and build legacy for their family. Because when you start doing this thing, and I tell you this now, when you start doing this, you're going to want to tell other people, and you're going to be disappointed because other people are going to be like, man, get out of my face with that stuff, man. Your $1, your $2. They're going to laugh at you. Those same people, they're going to laugh at you. But give it a year. Give it 2 years. Give it 6 months. Even, and you will see, right? You will see that your dividends is going to grow. It's going to start from that 5 cents, 2 cents, 3 cents to where you're going to be getting 20 cents, 30 cents, right? And before you know it, you're going to have to come in $1, $2, $3. And before you make up your mind, man, that would be so valuable that you'll be like, wow, I can't believe I've done this. But you just have to start. You just have to start. Because if you say, you know what, I'm going to use a financial advisor and pay somebody else to do it, I've done it. I had a financial advisor. The guy was managing my account, and then I opened my account myself. And when I start doing better than him consistently for 6 months, I close my account, transfer my money into my own portfolio to what I start to manage it myself. Okay, guys. So it's not rocket science. It's not rocket science. Opening your account, start with a small amount. $100, $50, because you're not used to doing this. You've never done this before, and this is not an account you can just go and take money out, right? But once you get the money in there, then the next step is to buy, right? I would say start with SUSD. It's not financial advice. Start with VOO. It's not financial advice. There's a bunch of REITs out there. I mean, you can put your 60% in the stock market, 20% in international stocks, another 10% can go into bonds, and then another 10% can go into REITs. I'm just telling you the right way to do it. That's not how I do it, but I'm just telling you the right way to do it. Okay, guys? Now you can do that, right? And if you follow these steps, I promise you, you're going to be successful. It takes time. It's not overnight. Like I was talking to somebody a couple of days ago. They're like, Edwin, I need your help. I was like, okay, I'll do my best to help you. And his first homework was to go and create his account. It took him 2 weeks, almost 3 weeks to create an account. He finally created an account. I said, okay, you created an account. He texted me and said, I created my account. I said, okay, so what do you want me to do? Well, I'm just letting you know. Okay, that's good. You create an account. That's good. Now the next step is for you to put money into the account, right? So sometimes when you create an account, they tell you got to transfer money while you create an account. I mean, I did it. I put $10 in there because I just want to do it, and then add my bank account, set that up. You start small. You can do you can do automatic deposit into their brokerage account, into those 3 separate accounts, right? If you got an extra $100 coming in every month, I would say break those up, right? Break those up into 3s, put 25 in each of those accounts, and then the one that you think need the extra, you put the extra $100 in there, the extra extra $25 in there, right? But I recommend try to max out your Roth, because that's free money that you can grow and gain stuff on, right, guys? So, I mean, you gotta do this. My email address is in the bio of YouTube. You can just go up there and send me an email, and like I say, I respond or put it in the comment. I respond to those too. But if you want to be something that just being you, send me an email. Join the Discord. Send me a direct message to the Discord. Okay, guys. I don't want the video to be too long. We're already past 30 minutes. I hope I provide enough information to help you guys adjust, right? And like I said, there's a lot of tools. There's a lot of tools out here, that will help you get to where you need to. Tracking tools and all that good stuff, right? That will help you. Come here, come on. There's a lot of tracking tools that will help you get to where you need to get, guys. Remember, like the content, guys. Share the content. We're on our way to 1,600 subscribers. I'm hoping we can get to 2,000 by the end of the month. I mean, the first goal would be to get to 1,600, and then once we get to 1,600, I mean, we'll see how long it takes to get the other 400 subscribers. But we're getting there. People watching the content, and I appreciate you guys. I appreciate all the support. If somebody would have told me and say, "Hey, yo, Edwin, you do this, and people are gonna watch," I'd be like, "Yeah, whatever." I mean, boring. Who wanna watch me? Guy from Africa who can barely pronounce some words. I'd be struggling to pronounce some words. I know you guys be cracking up laughing at me sometimes, but I just feel like there's so many people like me who don't understand how to do this, and they're so scared because they're like, you know what? I'm gonna lose my money, but you know what? If you don't try, you lose it anyway, because that money that can grow your financial future and help you and guide you to get to where you need to be, it's been wasted, guys. It's been wasted. Let me see if I can do this. Get out of the way. Let me move myself out of the way a little bit. Okay, I gotta make it smaller. All right, you go here, right? You said verify, and that's the email address right there, right? Just send me an email if you need to, right? And this is pretty much the channel. I always tell you guys, do your own research. Do your own research. And we're growing. This channel was open October of last year, right? That was October of last year. Last month was October, and we have over 30,000 views already with 140 videos, 130 video, 39 video. This is gonna be the 140 video. We got 100, 1,058, 1,580 subscribers. And as we continue to grow, right? And you know, I'm the Dividend Passport Bro. I'm a Passport Bro. I'm not ashamed about to tell you guys I'm a Passport Bro. But you know, people Passport Bro get bad connotation, bad name. But I'm here to make it to tell you guys it's not everybody that Passport Bro out there just doing stupid stuff and broke. You know, I'm successful in my own right. I'm not a millionaire yet, but God willing, I'm gonna be there next year. And with the growth that just happened in my portfolio, I mean, I'm about 100K away right now from being a millionaire, right? And it's gonna continue to grow, right? I didn't think I was gonna. I thought I was gonna get there next year sometime, but if everything's continue to grow like the way it is now, you know, I might be there sooner than I think. You know, and like I said, I don't do this video to brag, but when we came to this country, me, my mom, and my siblings, we used to have a paper route. And my mom she's the only one that had a Social Security card because she went to school here and all that good stuff. Police Academy in DC. So she had a Social Security card. My brothers used to go to a paper route, throw paper, the paper route, right? And I was in high school back then. It was in college. So of course, you know, high school you gotta go to school early in the morning. But college, they go to school at a certain time, so they used to go through the paper route. And on the weekends, on Friday and Saturday, I used to go throw paper with them, and I loved it because I felt like, man, I was growing. I'm becoming older, and I can do my own stuff, you know. And that foundation stuck with me, right? And that entrepreneurial spirit stuck with me, you know. Anyway, I'm just talking about that. I'm thinking my eyes are getting all watery. I get emotional thinking about that because I get to thinking about my mama. I miss her so much. For you guys who have your parents and stuff, I envy you guys. I wish my mom was here. As stubborn as she was, I miss that lady so much. One of my best friends, my mama. But anyway, guys, invest in your future, right? I'm 51 years old. I'm about to be 52. My daughter will be 2 in February. Right? She's going to be 2 years old in February. I'm 52. My daughter's going to be 2. Right? And my other kids are grown. Right? But she getting the best of me because I'm pouring everything into her that I didn't get to pour into my other kids. Right? She getting the best of me. And she's a daddy's girl. So everything that I'm giving you guys, right? She's going to get 10 times over. And she's going to inherit everything I'm building right now. So if I build this up to be generating $3 or $4 million a year in 10 years, right? Or in 20 years, by the time she's 18 or old enough, before she's 18, she's going to already know because I talked to her. She's going to know about money and understand money than what my parents did and what your parents did. To not make you understand the value of money, right? People tell you money is evil. Yeah, money is evil. Yeah, but it's real evil. Whatever. Because you need it, right? That's that poor man mentality, right? If you don't have it, then you hate it. But when you got it, you know you can use it to make more. So guys, I'm not going to make this video long. Invest in your future. I hope I answer a lot of your questions. Now, if I don't, you know what? I'm going to make another short video that have maybe it's like a minute or two that I'm gonna upload. You guys know I like to upload shorts and stuff. It's not quite a short, but I'm gonna upload that maybe on Monday early in the morning. To kind of to reiterate what I've just talked about to you guys. Okay, guys, I love you guys. I hope you're having a wonderful Sunday. Chelsea, we kind of draw today, go Blues. And you see, I got my yellow Chelsea jersey. I got a bunch of these. I got like 5 or 6 different Chelsea jersey. I'm waiting for my new one to arrive for this year. But you know, do it for you. Do it for your family. It's up to you. My job here is to make this video to motivate you guys every day. If I can motivate one person a day, I've done my job. Okay, if I can motivate two, well, I've done my job. Okay, and of course I don't get paid for it, but you guys watching the content is the payment to back to me to motivate me to continue to do what I'm doing, because I know I'm motivating other people to get there. Now, like I said, guys, I don't charge to do the one-on-one consultation. I can't even talk. So just send me an email, and if you need my email address, if you're too lazy to look it up like me, send me an email, a comment, and I will post the email where you can email me, and we'll go and talk about it. Okay, guys, I love you guys. Happy investing. Tomorrow's another day. I think the markets will be open tomorrow. Let's check. The markets will be open tomorrow, so we're gonna make some more money tomorrow, just like we do every day. Okay, guys, stay blessed. Have a great evening. Peace.